morning and welcome to today's 5 with Fitz. The major averages continue to inch higher on news that the FDA's approval for Pfizer's COVID vaccine and yet more solid earnings from the likes of Best Buy, Palo Alto Networks, Medtronic, and Camping World, among others. Here's my playbook. Point number 1. It's now the number 1 most widely held stock on Robinhood. Can you guess what it is? It's not AMC, but that'd be a good guess. Nor is it Tesla, which actually was until recently. No, the number 1 most widely held stock on Robinhood is now, drumroll please, Apple. Not that I'm surprised, mind you. Apple is worldwide. It's growing at startup rates, and it is making a medical pivot that isn't even yet remotely valued in the company's stock price. Oh, and by the way, the company makes nearly $200,000 every 60 seconds. Here's the key. Apple is widely expected to launch new iPhones in a few weeks, which will add more fuel to the proverbial fire. Point number 2, why I will not be joining bargain hunters anytime soon. Many US-listed Chinese stocks are surging to the upside after Beijing laid out conditions that must be met for companies that want to go public at home and abroad. Reports are that Cathie Wood of ARK fame has gone back into JD.com and Hugh Young of Aberdeen Standard Investments has purchased Tencent on the dip. Now, I could make the case the worst is past, and many are, but knowing what I know about China from the time spent there, that's a bet I am not keen to take anytime soon because of the risks involved. Save one possible exception, Alibaba. I sold a few cash-secured puts, the 17 December 21 $100 strikes, and would be very happy to buy shares at that price if the market gives me the opportunity to do so. If not, I get paid to go shopping by everybody else who's taking the risk that shares move higher. Point number 3, the sharks turn on each other. My, how the world turns. Retail investors have long had it out for big money players like Citadel because they believe it's an us versus them game when it comes to stocks like AMC. That is undoubtedly true, but what they don't realize is that sharks also turn on each other. Their Capital Partners is apparently suing Citi, alleging that the bank acted in its own interest, forcing the fund to default on a $263 million loan in March of 2020 and selling linked assets to its trading desk. Like that's a surprise. Point number 4, Walmart to deliver packages for other merchants. Now, I've long maintained that Walmart may be the only company capable of challenging Amazon because of its last mile capabilities. This news certainly lends credence to that hypothesis. Walmart is starting a last mile service ahead of the holidays, and I think it's going to pay off big time. Point number 5, what Best Buy's earnings really tell you. Sales grew by 20% and the company raised guidance. CEO Corey Berry attributes the rise to a dramatic and structural need for technology, but I think it's actually far simpler than that. Millions of people simply upgraded their technology to work at home. And get this, many will stay there for the foreseeable future. I think this shift could presage a new employment wave of quits and early retirements that are not yet factored into the jobs data. Digitalization and dislocation strike again. And if you're reading along in one bar ahead, you know exactly why this is great for your money. Today's bottom line, psychology counts. Pessimists play not to lose, which is why they have a hard time making money. Optimists, on the other hand, play to win, which is why they usually do. As always, make it a great day. You got this, I promise. I'm Keith Fitz-Gerald, and I'll see you next time. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.